Hello, my friends. This is Doug Fabian. Welcome to my weekly video update on the world of exchange-traded funds and the financial markets. As always, three things I want to talk to you about today. We'll begin with the market-moving news of the week. Two things happening this week that you want to pay attention to. Number one, on Wednesday, the Federal Reserve is going to be announcing its latest status on economic stimulus and interest rate policies. Not expecting any new news or big news from the Fed, but markets do react to the language as to when they perceive that they might be raising interest rates. That's the kind of the big deal, what the chatter is out there. So it's not just the stock market that is moved by the Fed meetings. It's also interest rates. And I'll talk more about that in a moment. The second item that's kind of off most people's radar here in the United States, but over in the United Kingdom, they are having a referendum in the country of Scotland as to whether or not they want to stay married to England and the rest of the UK. And so they're going to be kind of voting for independence or unity. And that has got the European financial markets quite nervous, because if Scotland does decide to be independent, there are a lot of issues that come up relative to the revenues that come into those different countries. There's a lot of issues that come up relative to the euro, and it also starts to create a precedent and momentum for maybe some other countries breaking up, specifically Spain and the region of Catalonia breaking away from the main body of Spain. So a lot of nervousness in Europe in general, but this vote is a big deal over there and could be a big deal for the financial markets. So it's always about how the markets react. Now, I wanted to take a trip around the world with you using just 4 exchange-traded funds and show you the current market trends. So let's take a look at some charts. We're beginning with ticker symbol SPY. This is the very first exchange-traded fund that ever traded in the world and is the largest exchange-traded fund in the world today. It represents the S&P 500, and as you can see from this price chart, the current price is above its 50-day average, the blue line, its 200-day average, the red line, and we're 1.5% or so away from the 52-week high for the year. We're in a rising trend in terms of price. Everything seems to be going pretty well as far as the S&P 500 is concerned. You can see the dip that happened in the month of July, and that is what is called in technical analysis price support. If the S&P 500 were to break 190, that would be a negative for the intermediate term as far as the stock market is concerned. I'm not predicting that, but I'm just pointing that out that that's something for us to keep an eye on. The second chart I want you to look at today is the exchange traded fund EFA. This is the EFI index. This represents all of the large companies and large countries overseas that are fully developed. Countries like Germany and Japan and Canada and Australia. The EFI index stands for Europe, Australia, and the Far East. It represents large cap stocks overseas. And you can see that this particular price chart has broken its 50-day average, and it's right down sitting on its 200-day average. So why the weakness? It's because of Europe. Europe is having some growth problems. Europe is slowing down, and if we were to have negative news, that's something that we want to pay attention to going forward. If we have a price break in EFA, that'll be significant. The next chart I want to show you is EEM. This is the exchange traded fund for emerging markets. We had a pretty sharp correction this past week in the emerging markets. They were down 4% in a single week. But you can see that emerging markets, if you look at the price trend, they are more volatile than the other two price charts, but they have been coming out of a much deeper, even bear market when you take a look at the last 3 years. I'm still positive on emerging markets. And we're still, even though we're below the 50-day average, we're still above the 200-day average. And corrections come along. I look at a correction in the emerging markets right now as a buying opportunity. And then lastly, I'm showing you a chart of FXI. This is the China 25. These are the 25 largest stocks in China. And you can see that this particular price chart is still in a strong uptrend. And it also has come down to its 50-day moving average. But I like China, I like emerging markets as two investing areas for us moving forward. And I wanted to update you on these price charts here today to just kind of show you what the current trends are that we want to pay attention to. Lastly, let's talk about interest rates. Interest rates have been stable. The 10-year Treasury bond trading today just a little bit below 2.6%. If we were to go above 2.8%, I think that that's problematic, and maybe that's going to set back world stock markets. But if we remain stable, that's a good thing. So let's watch what happens with interest rates this next week after the Fed meeting. If you would like to get some additional help with your ETF investing endeavors, I would invite you to consider a subscription to Successful Investing. And this particular newsletter now has 3 model portfolios: income, growth, and aggressive growth, 100% focused on exchange-traded funds, and we think we can help you. So check out this special offer from my publisher. This is Doug Fabian. Thanks so much for tuning in today. I'll be back with you next week.